Hi everybody, it's AJ speaking. Today I want to discuss the big picture around this latest news. Elon apparently bidding together with a group of investors for OpenAI. However, I think what investors really want to know is this a Twitter drama 2.0 or what's going on? And I think to answer that question, we have to dive into what actually happened during the Twitter drama, because the history is often conflated with various things and vastly overstated. But before we dive in, my view is this bid is just a tactical move to slow or halt OpenAI's transition into a for-profit company, and this bid has very low chances of succeeding. But I covered this in a post in detail, and this video is not about that. This video is about assessing the current situation by looking at what happened, and arguably the biggest event in Tesla's stock history was what happened during and after the Twitter Elon sell down. As many will remember, Elon had to sell a lot of Tesla stock to finance the takeover. So what happened? So in November 2021, Tesla hit the until then all-time high of $407 per share. And in the next 13, 14 months, Tesla traded down 75% to $102 in January. And a lot of people look back and think, oh, this is all Twitter-driven or mostly Twitter-driven, but a lot has happened. And I'd also like to point out there were periods of significant rallies. It was not just one way down. This is an important thing to keep in mind. So in the following, these red lines are aligned across all the charts are aligned with these red lines, so you're always seeing the same time period. So in this next chart, we look at the inflation, because that was really the big story. At the time of Tesla hitting all-time highs in November 21, inflation increased significantly. And remember, this was around the time that the Fed still was talking about transitory inflation, which was clearly wrong, and CPI hit 6.8%. It subsequently peaked at 9.1% in June 2022, and following which it came down. And when Tesla hit the low, inflation was still at 6.4%. Meanwhile, latest CPI estimates point to 2.9% in January 2025. The massive spike in interest rates caused the Fed, and this is what this chart shows, the Fed funds rate, to significantly and very quickly raise rates after they realized their transitory stance was completely wrong. And at time of Tesla's peak, the Fed's funds rate was super low at below 0.1% at 0.08% in November 2021, and then rapidly rose to 4.33% by January 2023, and kept rising even after Tesla's low to 5.33%, and stayed there for a year after it started to come down after this Fed started cutting interest rates to the current rate, which is 4.33% as of January 2025. I'm recording this video in February 2025. This not only pulled down Tesla, but also the market. Here I'm showing the change in the S&P 500, and you can see during the same time Tesla lost 75%, the market trade down 15%. 15% loss in S&P 500 would be considered a modest correction. But then importantly, we also have to look at Tesla's operational performance. And here you see the auto gross margin, excluding leasing and excluding credits. And you can see that at the time of Tesla's prior all-time high, Tesla hit peak margins at almost 30%. This is exceptionally high in the automotive industry. And as I said at the time, this was entirely driven by one-off effects that were caused by COVID. I will not dive into the details of that point in this video, because we'll get way too long. So it was entirely expected that margins would come down. This is exactly what happened in subsequent quarters. And as of 4Q 2024, we hit a long-term low at just under 13% at 12.8%. A big driver of the reduction in share price was not only Elon selling, but also the reduction in operating performance. And then also what you see here, FSD development. Here you see over the last 5 years, FSD versions plotted, and versions before version 12 simply weren't all that good. I know there are some very popular influencers who have had intervention-free rights for at least 3 years, but it was all bullshit, because I'm not going to talk in detail about it here, but there were, if you look, you have to always look at a diverse set of Teslas, and you could clearly see there were significant weaknesses. And like just from high level perspective, as long as you have hard coded lines, you cannot make it work, because human programs simply cannot account for all the edge cases in adequate manner, and that's why only a neural net approach could yield results that could ultimately lift the FSD quality that is required to be safe enough for widespread use. And the first signs of that we only saw from version 12, in my opinion, and as that is many times before. And the latest version 13, was a clear step change on top of that, and which really made it highly tangible to a lot of investors. And that's why we saw a lot of analyst upgrades who for the first time included FSD in their price projections, because FSD became so good with version 13 that it's now obvious to everyone who has ever driven in an FSD 13 vehicle. On top of that, we know that in 2024, Tesla increased its compute capacity by over 400%, which should, in theory, accelerate Tesla's progress in FSD. And it's widely expected Tesla is about to launch its ride-hailing network with fully autonomous vehicles. I expect in the beginning there will still be some Tesla employees in the vehicle just for monitoring the vehicle. And will subsequently be removed from vehicles. So the bottom line, compared to the prior peak and the subsequent sell-off, the situation, I think, currently is a completely different one. First of all, the main item that kept sort of disappointing back in after the 2021 peak was FSD. Clearly, it took Tesla a while to make it work. Of course, it was exceptionally difficult, and Tesla simply didn't have to compute for several years to run it fully on neural nets. This problem has been solved. FSD has made huge progress, and the launch of the ride-hailing network is about to be launched. So that's a huge, I don't want to use the word catalyst, but it's clearly, once it happens, this supports the stock. This was absent after the last all-time high. Also, inflation, the current outlook for January is 2.9%. Tomorrow we get the latest reading, which is also a completely different situation from the last all-time high, where inflation was still running up, putting pressure on the markets. This means that I'm not sure whether we will see soon further interest rate cuts, but at least significant hikes in interest rates appear to be unlikely at this relatively low inflation rate, which is also completely different to the situation at the last all-time high. Additionally, at the last all-time high, Tesla was really riding on auto and FSD hopes. This time it's a different story. Tesla is much more diversified, and the energies business has grown to a meaningful scale. And Tesla just launched the first ever purpose-built Megapack factory, and that will have an impact in terms of earnings generation. On top of that, the globally best-selling vehicle received for the first time ever a refresh. It's I think, in my opinion, highly unreasonable to assume this new vehicle would sell in 2025 fewer units than in 2024. Hence, this will provide a robust earnings base. On top of that, management provided clear guidance that they expect several thousand units of Optimus to be produced this year. I think their value contribution is unclear, but I think this doesn't matter. Just the scene of potentially dozens or hundreds of bots working in Tesla's factory, I think, will make investors think twice about Tesla's future and likely in a positive way. So with that, I wanted to keep this video nice and sweet. Bottom line is, and we jump back to the beginning of this presentation, I think the current situation is exceptionally different from the situation in end of 2021. I know investor sentiment in Tesla is very low right now. I get literally dozens of messages from investors every day. But the same was true in 2024 after the first quarter, when Tesla hit the $140 range. I don't think we will revisit these ranges. And I think sentiment will very quickly change as soon as we see more robotaxis on the road. And Tesla potentially about to be launching the next FSD version, which I expect to be still, which will still deliver significant improvements over the current version, which is already very impressive. So with that, thanks for listening. See you in the next one. Bye.